She said, yeah, great. Sam asked, China mob using cryptocurrency, how can we profit? I don't know. Yeah, we'll talk about. I think I'm gonna give some update on the on crypto today. We didn't do an update last week, so I'll give you some update. But again, this is a long-term thesis. I don't even believe in taking, short-term doing any short-term moves. She said, yeah, join the mob. Not a financial advice, not a life advice. Tetradollar. I don't know what tetradollar is. Is it one of those meme coins, Sam? I know what petrodollar is. I don't know what tetradollar is. Hold on, let me just pull up. Let's see what we get on CoinGecko. Tetradollar.
Sorry, I forwarded,
Okay.
I tweeted you
Nothing.
all the exact
Nothing comes up.
specification. It's the stable coin in Hong Kong, I think.
All right.
I tweeted that to you this morning.
Make
Petro,
sure I
whatever.
can.
Hold on, I'll just pull up the article.
What else? What else is happening? Yeah, we will talk about crypto. Last week, some of you have requested, Reddit. As you guys know, Reddit has filed publicly now for IPO, so we have access to their S1. I spent a couple of hours yesterday evening going through the S1 document, so I will review the S1 with you guys. Then you can decide what you want to do with Reddit. What else? Of course, there are some earnings. Probably not gonna go into as detailed as I've done in some of the previous ones. But yeah, we'll do a quick run through of earnings. Definitely want to spend a little more time on Snowflake. I know this is one of our darlings. I never owned it, but do want to talk about that. Zscaler, Li Auto, Magnite, Coupang. These are the companies that I've spoken or reviewed with you guys over many seasons. So just want to go back and look at that. Tether is a stable coin. Yeah, Tether I know. Okay, so that was a typo. I mean, Tether has been around for ages. Tether FUD has been around for ages. Tether has been sued by regulators, but it still survives. Yeah, Tether is and Tether outside of US, Tether is the most used stable coin. In the US, generally, I mean, still this is the most active one, but we see a lot of share being taken by USDC, which is from Circle.
How can we profit from it?
Okay, all set. Anything else in your mind? Are you excited? Markets have been all-time high, guys. S&P is up all-time high, Dow Jones all-time high, NASDAQ all-time high. What else can we ask for? There's nothing to complain. I mean, if you have been in the market. And believe me, I don't think everyone is still in the market. There's a lot of folks who have never invested. So anyway, so let's start with that. As always, I see some new names out here. Let me just do a quick intro. Okay, Abhishek, you are the same Abhishek, the OG returning back, or you joined recently?
Oh, I joined recently, so it's my first meet.
Okay, I can't hear him.
Yeah, can you hear me? Hello, can you hear me?
Right, it looks like something on my side when it comes to the.
Can you hear me?
Can anyone else speak up? Because I'm not able to hear.
Okay.
Hello.
Hello.
Can you hear
Hello.
me?
Okay, so
Yeah.
hold on. Looks like something on my side. When
Yeah, I
it
can
comes
hear
to
Abhishek.
Why am I not able to hear him?
Can you hear me, Vivek? Abhishek, can you hear me?
Yeah, now I can hear you. Sorry, the
I can hear
volume,
you.
the
Yeah.
volume was low. Yeah, now I can hear you.
Okay, so yeah, I'm just a new one. So it's my first meet. So
Okay. All right. Welcome. So, how did you find us?
this was kind of like scrolling Meetup and was part of the
Yeah.
group. So yeah,
Okay.
so it sounded interesting. So hopefully something to learn.
Yeah, I mean, this is for learning and sharing, right? I also do this so that I can learn from you guys. So anyway, the reason I asked was because we have one Abhishek who pops in and out. Is like started joining in almost 3.5 years ago when I started this. So I remember last time I'm like, hey, is this a new Abhishek? And he like, no, I'm not a new one. So I just wanted to check, is an OG guy or is a new guy? So
Got
welcome, Abhishek. Welcome to the group. Where
Thanks.
are you from? If you don't
So
mind sharing
I'm
geographically.
I'm located in the Silicon Valley, in the Bay Area on the South Bay. What about you?
Okay. Oh, I'm in same case. I'm in West San Jose.
Oh wow, like you're not far.
Yeah. So it looks like we have more folks, lot more folks from Bay Area. Maybe in person someday we can meet up. Anyway,
Yeah, absolutely. Yeah, makes sense.
okay, I see another name, A. Johnson.
Yes, hi, I'm from Sacramento area.
Hey, Johnson, welcome. So just to make sure that I understand, to make this session useful for you, how you guys have been in your investing journey? I mean, starting up, are you on just stocks, derivatives, futures, options?
I'd say like pretty much starting up, like it's
Okay.
not like more than 6 months, I would say. Like so still kind of like learning things so that makes some meaningful investments. So
Okay.
yeah.
So before we jump onto the investments and all that stuff, I think, and again, I'm not a financial advisor, but there are few stuff that we need to do to make ourselves ready for investment. There's a pre-investing checklist and all that stuff. Yeah, so we'll talk about it maybe later. And how about you, Johnson?
I've been attempting some options over the last few months and just wanted to find a community where I could share perspectives.
Sure. Yeah, there are a bunch of folks. I mean, I do options almost every day. And there are a bunch of folks who are pretty active in options. Most of us are option sellers. At least I'm not aware of, in my circle, I'm not aware of many folks who actually buy options. So we are mostly option sellers. But I generally don't go deep into options in these sessions unless there are questions around it, because I want to make sure that this session is useful for everyone and majority of the investors, they just start with the stocks. That's how I got my start. So unless there are questions on specific options, etc., sometimes I do bring up some option stuff to talk about, but if you have a questions, feel free to bring it up and we can always talk about that. Ross says, anyone put some money into yield max ETF? Seems to have 10% yield. Yeah, so Ross, I've not put any, but I think I reviewed multiple yield max ETFs. In 2023, these yield max ETFs became very, very popular because of the skew in the options. See, we're talking about options, right? There's a lot of a call skew in the options, and I saw a bunch of these yield max ETFs based on individual stocks being coming to the market. And even though, I mean, they do 10% yield, Ross, but if you compare the overall return, which means your yield plus your capital appreciation, in 2023, majority of them did not do well. So you could have just maybe bought and hold, could have just bought and held the underlying security rather than having a buying a yield max ETF for that underlying security. So I don't have any positions in any of these yield max, but I saw on Twitter a lot of newbies got, especially the dividend folks, got attracted towards this YieldMax ETF in 2023 because of 9%, 10% dividend yields. So the other thing to look at, I think someone mentioned, right? Jay mentioned that yield can be misleading if the stock price goes down. Yeah, that's always the case, right? So all they do is sell a covered call on an underlying, and 2023 was not the best season to sell covered call, specifically on some of these high growth volatile stocks, right? Your stock could have been called away. You could have missed a lot of upside, and that's what, at least last time when I reviewed those yield max in this session, I think we talked about it. So let me see if I can. If you need more details, maybe Misty, if I can point you out to which session did we cover yield max? Because I remember specifically talking about it. We talked about in session, looks like 197. Yield max. Yeah, so one of them was, I think, MSTY. I think. There we go. Yeah. So I see, like, now imagine if you had bought yield max ETF instead of MSTR. You probably are way, the folks having MSTR equity would have earned a lot more than this yield max. So no, I don't have. Yeah, that's all they do. They get a synthetic long exposure, do a covered call. And there are many such yield max ETFs. So that's my thought on yield max. All right. What else? I do see another new name. Nyanka.
Hi, Vivek.
Hey, how are you?
Doing good. How are you?
Good, good. Is this the first time?
No, we've been joining last couple of sessions under my husband's name, Dipen,
Oh, okay, okay. All right. So how did you find us?
on Meetup.
On Meetup?
Yeah.
That sounds good. Okay. So since you're returning back, I'm hoping the previous sessions have been useful. So
Oh, yeah,
good to see you back.
definitely.
Good, good.
Definitely. It's been really useful. And it's good to have a community around who has a similar interest.
Yeah, so
So
I
this
was
is
talking to one of my friend and he was like, isn't investing boring? I'm like, investing is not boring, but it's a very lonely endeavor, right?
exactly.
So and let's say the reason why I do this Saturday session is just to have someone to talk through, to bounce some ideas and to, see what's happening in what happened in the market in a week. Otherwise, it's a very lonely endeavor, and people, maybe if you're not really passionate about it, you just can't carry on this one. So,
That's
all
true.
right.
Thank you so much for having this group. It's really nice.
No, you're welcome. You're welcome. When I really wanted to get serious all around investing, I mean, I've been investing on the sidelines for many years, and I wanted to learn more. I remember one, I don't know who said it, but obviously someone much wiser than I had said this, like, if you want to learn, you should teach. So I jumped into it without doing much. And so you guys forced me and keep me on my toes that, oh no, I need to prepare something. I need to learn about this. So thank you. All right, maybe I'll pick one. What other name I don't recognize, and then we'll jump on to today's session. Who else? Viral Sura. Is this the first time?
Hey Vivek, yes, that's me, and this is the first time here. Thank you for hosting this session. I also found you through Meetup, and I was looking somewhere local, right? So it's okay, great to start virtual, but then if there is interest, definitely meet up and share more ideas. And I was more interested in options. That is what attracted me here. So I know you mentioned you're going to do more on stocks, but I think it would still help in options in terms of some technical analysis and stuff, when to get in or what side to put in. So I'll hear for some time and then see, how it goes. So thank you again for hosting this.
Yeah. So when it comes to options, I don't focus on a lot of. I mean, I generally focus on IV to see what's the IV, and then decide on first. My first criteria is IV. Then I look at little bit of a technical is using. If I were to sell a put, should I sell it right now or should I wait? Is it pick up whatever correct indicator you want to, right? Every trader has a different one. I look at a combination RSI, CCI, and Bollinger Band and say maybe should I do it now or should I do it later? But mostly focused on very mechanical IV based, implied volatility based option selling. But yeah, bring up anything that you may have. It'll be interesting. We can all learn from a different perspective, and will be if you have something, let's bring that up.
So just a quick note on that, right? Very technical on us, and how the market had been in 2023. If you did investing, did that mechanical investing on option side still hold up? Because at least on the FANG or the Magnificent 7 or 8 or top 10, it has just been going through the roof, right?
Yeah, so the way I do it, and I think everyone has their own opinion. So I have carved out a portion of my portfolio, what I call as a coffee can portfolio, right? So that's a number of stocks, across different tickers, some stock that I will always keep in my portfolio. And then I see if I want to sell a covered call, how do I sell a covered call only, so that I don't lose any of those which is in my coffee can portfolio. So in 2023, and I've covered in some of our previous sessions on if a market is rising up, how you can still reduce your cost basis by selling call. Instead of selling call, you sell call spreads, right? So 2023, I've been doing many of these high flyer stocks. Instead of selling just the covered call, which means you own an underlying share and sell a naked call against it. What I did was sell $50 wide call spread. I lose a little bit of a premium, but it will keep me in the game. If you end up, holding NVIDIA and then NVIDIA move from $300 to $700 in a year, right? So yeah, so you have to change a little based on how the market is. But I think the overall theme of trying to reduce your cost basis by selling options, that has served me well over the years.
Got it. All right. Thank you.
All right. So guess let's get started. Sorry if I miss any new names. Maybe we can do some more intros next week. All right, as always, this is not a financial advice. You don't want to take any financial advice from a person who has never worked in a financial industry, right? I've spent all my professional life is in the tech industry. So don't take financial advice from me. Naresh has picked me up. All right. I don't know. What do you want to talk about, Naresh? The stage is yours.
No, I'm just pulling your leg.
All right. So let's talk about the stock market, right? Like I said, we have S&P 500, Nasdaq. Everything is up season. I'm getting some vibes of 2021, or those who have been around much longer probably are getting vibes of 1999, 2000. And so we never know where the market will go, or how high the market can go. So, and at least this week, some of the stocks that I owned, I'm like, why the heck is the stock going even up, right? There is no earnings, there is no news, and the stock is up like 13-14%. So very different vibes from what the market was, let's say in 2022, right? So anyway, so one of the stocks like Jumbia, it was up 13%. And I know it did a good earnings. The earning Q4 results were great, but that stock was already up 30% after Q4 results. And now it is up another, what, 13, 14% today? I have no idea, right? So this is where I see some of these smaller stocks. Why even smaller stock? Look at SMCI. Is now up almost up to $900. And now SMCI has been included in S&P 500 on Friday. So this beast could go down to 1,000, back to 1,000, who knows? Chandra say 1034 is in after hours. Yeah, I think that probably would have been after the S&P 500 inclusion news, right? And great, this has been riding the whole wave of AI. And my opinion around this, right? I am bearish on this one. I don't know how long this can continue, but I'm not gonna short this. I'll just watch from the sidelines. Another one, AMD. What the heck AMD did? I mean, they reported their results a while ago.
Vivek, if you don't mind,
Sure.
SMCMA, you don't take now with the position because S&P, they're going to add into S&P 500, right? So if you remember the Tesla time, it's keep increasing, almost 30% increased that time, during the time. So won't that happen this time also, like from here?
No, I don't build investment thesis based on that somebody gets included in S&P and have a what do you call, as a passive flow coming in. Maybe a little bit of a pop for a short-term duration, fine. But when I am investing, I don't invest for short-term.
Okay, but thing is, in reality also, for example, every fund manager, the fund who maintains the S&P 500, right? They're all buying, right? Because that's
that's what I'm saying, that the passive income will flow into SMCI. And that may be a reason we do see when the companies get included in a particular index, you do see a little bit of a pop. But is it going to happen every time? Maybe, but I don't invest based on that. It's just my discipline. There are so many factors that could move the stock, but I've decided I don't want to invest just because somebody is getting included in S&P, because what I don't know is when that effect will wear off. Is it 10%? Is it 20% pop? Is it 5% pop before it goes down? Because this is all based on the sentiment. And there are people who invest based on sentiment and probably know when to get down from the roller coaster. I don't. So
got it. Thank you.
Yeah. So I'm not saying that, one cannot, but it depends on what kind of investor you are, right? Now look at AMD. I don't own AMD, but any owners of AMD, can you tell me what happened with AMD in the last 2 days? That beast is up from like 180 to almost $200, another 10,
Because
11.
of the Dell, actually, the way they're saying is Dell was using their AMD components, chips, I mean, yeah.
So I'll talk about Dell, because today morning I looked at it, like Dell was up 30%. I'm like, what the heck they did? What did Dell do to deserve like 30% pop? So I think I do have a table on that one. So we want to get deeper into what Dell did. Meta is up 45% for the year. We are not talking about micro cap or a small cap or a mid cap company. We are talking about one of the biggest companies in the world, and they're up like 45% in 2 months, right? We just finished 2 months, and if I read correctly, this February has been the strongest February in the history. Nvidia, there's no slowing down Nvidia. 2023, Nvidia was up like 250% plus, and in 2 months, it's up 70%. AI is eating the world. ASML, I mean, I own ASML, I own Nvidia also. And now I can't wrap my head around what ASML has done, that it is up another 15% in 3 weeks. Nothing. Right? They just, I shouldn't say nothing. It's only day before yesterday that they confirmed the the first successful test of their high NA machines, and Intel has bought one, but that's using for very high-end chips, like less than 2 nanometers. But that has nothing to do with this 15% pop. TSM. So anything which is related to AI or chips or semis is just blowing up. Right? TSM is now new 52 high at 136. Let's talk about Dell. Dell is up what 31.62% after the reported earnings. And I'm like, okay, let me just figure out what happened with Dell. So today morning I pulled up some results on Dell. So what at least I saw, revenue is actually down 11% year over year. Gross profit is down 8% year over year. Gross margins is like 23%. It's at the end of the day, it's a hardware company. Operating margin is like 6%. And it's not just now, that's been always been the case, right? Q4 21, 3.87%, 22, 5.75%, Q4 24, 6.68%. And at least I didn't find anything in here that tells me why it deserves like 30% pop. Of course, they increase their net income, and probably that has to do a lot more with something outside of a business, because operating income increased only by 25%. So they are able to operate better, that they are not growing. The revenue actually decreased, but they still made better they still manage their operations better to still deliver 25% operating margin. Right? But if we are talking about 30% pop, I thought there is something has to do with, like, they blew the numbers out of the park, or maybe did they give a guidance that surprised everyone. So I don't know. So let's look at, and this is how a basic quick analysis you can do is, let's go to Dell and see what the heck they have done. No thanks. Let's look at a press release and look at their balance sheet and P&L. Okay, so this is the press release. Fourth quarter, 22.3 billion. That's fine. Full story. The fourth quarter revenue was down 11% year over year. Operating income was this. Operating income was up 25%. We just talked about. So they're able to pull in some operating leverage, but it's still down 1% year over year. Cash flow from operations, $1.5 billion. Good, and that's fine. It's a mature company, so we'll generate cash flow. Revenue was, for a yearly revenue, down 14% year over year. And operating income, non-GAAP as well as GAAP, is down 10% and 11% year over year. So far, I don't get a confidence to invest in Dell. So let's read on. Cash investments for $9 billion. Okay, balance sheet, increasing annual cash dividend by 20%. Okay, that's good, but I don't think that's where the market is pricing its, the pop. Generated 8.7 billion cash flow, returned 7 billion to shareholders. So clearly, they are saying that we don't find too much growth prospects in our own business, and that's why we are not reinvesting in the business. We are returning it back to you in form of either the dividends or the share buyback. I don't know if I never owned Dell, so I've never looked at it. I just looked at today morning because I was looking for, like, that the Dell showed up on my Finviz screen as like most what do you say, the ones which are most gainers. I'm like, what the heck Dell did? So fourth quarter, yeah, it's the same stuff. Okay, so infrastructure solution group, and someone said maybe it is because of AI. Possible, because they sell servers. So maybe look at their servers. Are they selling more servers? ISG is revenue 9.3 billion, up 10% sequentially. So this is important. From quarter to quarter, it came 10% higher, which is great, but it's down 6% year over year. Maybe it has something changed in this year, which is AI. Servers and networking 4.9 billion, primarily driven by AI optimized servers. So I guess maybe this division is causing all this 30% pop up. But I still don't see that they have, like, unlike NVIDIA, which actually has delivered in case of numbers, I don't see that happen with Dell right now. Maybe it's just a story that they will be able to. Did they give a huge guidance? Are strong orders increasing nearly 40% sequentially and backlog nearly doubling? So, okay. So I think that's what they're saying. They got 40% more orders and backlog nearly doubling. So even if they get 40% more, I still don't see. I mean, we have yet to see it, whether how much of this translates into their revenue or not. So today, sitting right now, to me, it looks like more of a story, which could be a great story, but I don't see numbers validated by it yet. Maybe next quarter we will see that the 40% sequential jump actually result in a 40% jump in revenue. Maybe at that point of a time, I'll get interested in Dell. But I don't think, I mean, I don't see why Dell deserves 30% jump after the quarterly results. The results were so. I mean, I wouldn't even say so that they actually they lost revenue. But I think this is a guidance around. It looks like they didn't issue even a formal guidance. I don't see any conference call. Yeah, so there is no formal guidance. So yeah, it's a story. Like I think Professor Damodaran has said, right? Investing theses need to have both. If you have a story without the numbers, it's a fairy tale. And if you have numbers without the story, it's an Excel sheet. Right? For building an investing thesis, we need to have both the story and the numbers. Right now, I think it's a story with the Dell, and I'll wait for it to show the numbers. So yeah, but I guess the situation or the in the market, the way anything to do with AI, there are a lot of people who are willing to jump on to buy at whatever price. Even the short interest, I didn't see too much of a short. This wasn't a short squeeze. You look at a Dell, the short interest was what? Let me just bring that up. Was just 4%. So I guess it is just on the hope that they mentioned will have a sequentially 40% up, and now we are hoping that it will happen. And 30% pop on that. Okay, I'm not chasing it, guys. I'm not chasing that. So yeah, short float is only 4%. So it wasn't even a short squeeze. All right, so that's on Dell. That is the reason dividend up. Yeah, AI and future prospects. Yeah, I agree. So yeah, that's the story on which it is riding. But like a story without the numbers is a fairy tale. And I'm not saying, stocks and the market can stay crazy longer than you would expect. So I'm not going to go and short Dell, right? But I'm not going to put my money behind Dell right now. All right. So looking at these all stuff, I also start to see some deals coming, my way, wherein, some entrepreneurs pitching their startup ideas and seeking investments. So those who want to pitch anything, I don't invest in private companies. I'm not an angel investor. I'm happy investing in public companies. That's what my expertise is, and that's what I want to be. In 2021, I saw many retail investors turning into VCs, right? That's something. You look cool, you look good. You go to cocktail party and say, I'm an angel investor. People look at you in awe, right? I don't need all those stuff. And I'm very open saying I don't do angel investing. It's a different, if I were to do an angel investing, I want to invest at least 50 companies, right? I don't want to put that amount of a capital right now. The success rate in angel investing is very low. All we get to hear is how one company worked, but what we don't hear is how about the other 49 companies that did not work, right? So be careful. When there is a free money, when you feel wealthy, when you feel that your house prices have gone up, your stock, your investments value has gone up, you feel wealthy, and our minds start to make all those, venture out to do some angel investing, to do some private funding and all that. Be careful. So I saw this chart, which again reinforced my belief on, why I should stick with the private company. Is 2002 to 2023, 50-50, right? 50 private equity, 50 venture capital. Right? The portfolio has performed almost the same as S&P 500. I'm like, why the heck? If you're looking for a long term, why the heck you have to venture out and try to do something which, if you're a retail investor, if you just stay with S&P 500, you would do almost same. Right? On top of it, you have you have access to the liquidity. Right? You invest in a VC company, and I'm not saying that one should not, but one should understand where your strength lies, right? And what kind of investor you are. The VC, the investors in the VC have 20, 30, 40-year time horizon, right? Endowment funds, pension funds, they're not looking to sponsor or their house down payment by investing in VC. If you have that kind of a time frame, 30 years, 40 years, and want to take a bet with some amount of a capital on VC, go ahead. What pains me is seeing some of my friends trying to do angel investing. Why? Oh, because my kid is gonna go college in 2 years. I need to make some money. I'm like, okay, that's not what VC is for. So anyway, coming back to this chart, almost same, right? And if I look at this chart, I'm saying the amount of a risk which is in doing angel investing, because you have a lot more failure, and the amount of the liquidity you have your VC investing is not liquid enough, because it will take you 10 years to get to get liquidity out of it. I'm like, doesn't make any sense to do in S&P, to do it in VCs, right? Now, if you break the private equity and a VC2 separately, over the last, from 2002 till 2023, what has worked better is the private equity. And the venture capital means, and this is like after deducting all the fee and all that, has performed even worse than S&P. Right? So before you invest in angel investing, syndicates, or the funds, understand yourself first, understand when do you need to have those returns, and understand the volatility in the returns and the success rate. You have a capital to deploy in 50 startup companies, go ahead. Because if you deploy in 50, maybe you'll find one or two, if you're lucky, that will become Google. Right? Chandra says, earlier investing startup, the better, but the fail rate is exactly. Fail rate is very, very high. Yeah, you don't find the Google and the Facebooks, they don't come along so often. Aussie say, check this out. Anyone is angel investing, invest funds into Y Combinator demo day. Yeah, but be aware, majority, I mean, it's the startup success rate is what, 2%? It's when I say, and probably Google's and the Facebooks of the world is less than 1%. If you can find those, great. I don't know how to find those. What's included in the private equity bucket? So I think, again, I don't have a detail. Maybe I have not looked at this study from a Cambridge Associates, but the private equity will be your KKRs of the world, or like Silver Lake, Apollo, all that those big private equity players. Even the best VCs get only 1 win in 10 investments. And that, I think, is percentage that at a higher percent. Even that's probably going to be less. Right? So that is why I don't pitch angel investing. I don't do angel investing. Maybe sometime when I have a much bigger capital, wherein I can invest in 50 companies and use the same model, which is spray and pray. I'll do that. And then if one of them works out, then I can come back and say, see, I made whatever 250 times. And then, I hear many VCs talking about why you should invest it, because they had one success, right? But nobody talks about the other 99 failures. Anyway, and I mean, there are so many opportunities in the public market itself. I don't feel that I need to venture into angel investing. All right, what else happened this week? There were some changes in our indices. And these indices are where a lot of passive capital flow in. We saw Dow Jones. Amazon has now become officially a boomer stock. Okay. The word I use boomer because Dow Jones is like your grandfather's index. It's been around for ages, since 1800s. Now Amazon has joined Dow Jones Industrial Average. For those who don't know, Dow Jones has 30 companies in it. Mostly started with the industrial, era companies, and it's been changing its constituents. So this was a 52nd amendment or 52nd change in Dow Jones, and Amazon got in, and who got booted out? Well, that was the Walgreen Boots Alliance. So Walgreen is out, Amazon is in. Good to see some new economy companies getting back into Dow Jones. So another change that happened is S&P 500, in which Super Microcomputer, we talked about it earlier, that has joined S&P 500, and Whirlpool is out. And the other is Deckers Outdoor is joining S&P 500, and this bank, Zions Bank, is out. So there are a couple of changes that happened on indices. So now, those who are investing in S&P 500, so Supermicro was part of a Russell 2000 earlier, right? Before it got inducted into S&P 500, but it's no longer, a small cap. So what's its current market cap? SMCI.
SMCI was part of the S&P 400 mid cap.
Yeah. So it's still in rut, but it's like $50 billion. It's no longer a small cap. So, and I think now S&P 500 has now included Standard & Poor's now included in it, S&P 500. So it's now in the big leagues. So there are billions, hundreds and billions of dollars that flow passively into these S&P 500 ETF. And like Chandra was saying, that generally does give a little bit of a pop to the companies who get added. So if you subscribe to that investment thesis, that's something that you may do. Probably it already is priced in, because it's, it's not a secret. It's not something that, nobody else is know, but only you know. So you decide what you want to do. Deckers Outdoor. Today morning, I was listening to a podcast and I realized that they were talking about running shoes, and one name that keeps coming up is Hoka. Oh, I mean, I'm not a runner, but once I visited REI and I've seen, a lot of Hoka shoes. Looks great, and that's from Decker's Outdoor, and looks like maybe those shoes are doing great. What is Decker's Outdoor stock done? Anyone own Decker's Outdoor? Decker's Outdoor Corp. Stock is done. Damn, it's up 100% in a year. Close to 450 to 900 plus. Man, those shoes are running really. So two good increase in sales year over year, and shares count is coming down. It looks to be a very interesting company. Management focused on more shareholder, not diluting it, but in fact, maybe they are buying back their shares. It's only $23 billion company. And $4 billion of sales and $723 million of income. Maybe I should look at this. 30% return on capital, 53% gross margin, 21% operating margin. And it doesn't sell software, but their margins are really good. Okay,
It's up almost 10,000% for the last 20 years.
Sorry?
It's up by 10,000% in the last 20
Wow.
years.
Okay. So there are investments. You don't really have to always chase the biggest shiny star. Yeah, maybe I should have thought about it much earlier. Anyway, something that I can hold on. Let me just note it down so that I keep it on my radar. DECK. So only reason I brought this up because I was looking at what changed in the index, and then this Decker Outdoors came up. And the other thing I heard was that they are basically manufacture Hoka shoes. Okay. All right. So that's the change in the index. Market performance, S&P is up like 7%, close to 7%. Nothing to complain about. We are just 2 months of the year. And utilities and real estate, they haven't performed, at least this far. Understand utilities. The dividend yield is not attractive when you can get actually 5% in treasury. In fact, I helped one of my friend Friday to help him how to buy a treasury T-bill from on the brokerage firm. So we just bought a T-bill which is maturing in January 25, and with a yield to maturity of 5.03%. And the friend I help with is very, very conservative. Okay, maybe I'll take a couple of minutes to talk about this. And this is what pained me is, he's been working for 25, 26 years, and has never invested. I was surprised when he's never invested. And he just recently lost his job. And then he thought maybe he needs to look at his other finances. And he knew that, I do invest and I am a little bit active in market. So he called me up. He says, yeah, I need some help to see, what I'm supposed to do now that I have some more time available to me. And given the job market situation in IT, I think the expectation is probably it will take some time to find a next job. And so we just were talking, and I was like, okay, before even you go towards investing, do you have your life insurance in place? Do you have your emergency fund in place? Do you know what your next 3-year big expenses are? Where is that money sitting? Right? All the pre-investing checklist. I went through him and like nothing. So I was helping him this week in trying to move, okay, create an emergency fund, buy a life insurance, and look at what the expenses are coming up, put money in a high yield savings account. What I was surprised, and which also pains me, and that's why I come here every Saturday, is he had a 7-figure in checking accounts spread across multiple checking accounts. When it changed the job, or only investing is the 401k, which is by default they put in your targeted retirement funds. And I'm like, thankfully that the 401k provider was doing it. Outside of that, every single penny was in checking account. I think I only found 2 of them were CDs, which were like 1% something, which he had opened in way back in 2009, 2010. And I was like, gosh, missed out on so much of upside. You could easily, and I'm talking about like it's 7-figure sitting in checking accounts. So now we're trying to consolidate, and so then so he was like, I don't want to invest in something. That's fine, right? Stock is only thing if you need something after 5 years. So let's look at when is your kid going to go to college. That's what I helped him to buy the treasuries. I'm like, buy treasuries. So we ended up buying like 250k worth of treasuries. So that helped me. I think there's a lot of people who are still staying away from the markets, right? And probably need help. But anyway, that was a little side story. That's what I looked at. I'm like, oh wow, treasury is still giving 5.03%. Of course, that was coming from secondary market, and there was no new treasury auctions happening. So we ended up buying 250k worth of treasuries. Bobby, any recommendations term life insurance policies? So I just gave him a link. I mean, there are many websites where you can go and compare the policies. So long back when I bought policy for myself and for my wife, I had used this Xander insurance. And again, they are the, what do you say, aggregator. So you can go and compare the different life insurance policies. So I'm a fan of a term life insurance and not whole life or index life or universal life. So I just went and bought term life insurance from here, I think 5-6 years ago. So anyway, so that was a story. So if you think markets are all-time high, people are invested in, no, I just met a person who has never invested. Chandra, to buy treasury, follow ladder strategy, invest 250 in different months to year, or some other strategy so my personal one is, first time I started investing in treasury was 2022. Hold on, let me just bring it up. And then we came and talked about here because the Fed was started to increase the interest rates. So that's where I started to invest in T-bills. And my first one I did was in October 2022. And what I did was to basically have a ladder. I used to do every 17 weeks. So first one I started with 4 week, 8 week, 13 week, 17 week, right? And then kept renewing each one of them for 17 weeks so that I have a liquidity. After every 4 months, I get to decide what am I going to do with the T-bill that has matured. And, the rates were still higher, so I kept reinvesting them and then adding more to it, to my T-bill positions. 2020, I did that till 2023. 2024, now what I'm planning to do is, if they're maturing, I probably will use and hold it, hoping if the market goes down, I can deploy that cash, right? And we know in 2024, Fed probably gonna decrease the interest rate. If that happens, then I'm not gonna put more in treasuries. But I had built a ladder of 17 weeks. Let me just look at. I have one for 52 week, 156 week, 104 weeks. So I have a bit of a ladder, but yeah, that's how I did. So now let me just show you something that might help is okay, without revealing too much stuff that I don't want to. This is how my current T-bill maturities are looking for, right? So there is all of them are matured in 2022. Now there's something looks like there's something maturing in the week ending 3/5. This is how I used to build my ladder, right? Then there's something which is maturing in 3/19. Then there is maturing on 3/24. And then there is next maturity is on this week. And then there are a few ones that I talked about 156 week, 104 weeks and all that stuff. Okay. Now the question is for my friend 250K is the reason is because he wants to have access to that he has time only to invest till January because right now his home is on what do you call interest only mortgage. And in 2023, 2025, that interest is going to reset. Right now, he's like 2% something. And now look, if you go and look at the mortgage interest right now, it's like 7%. So we were planning, he was like, it's going to be 7%. And he wants to pay down a huge amount of a principal in January 25. So that's the reason why we picked up Jan 25, picked up whatever is the maximum amount and allocated that. So that was the reason. If I were to do it in terms of general investing, like I showed you, I had done that ladder. You allocate the same amounts for each one. That's how I started. But then I looked at if I get, an additional income, which I don't have to deploy, I used to put that in treasuries. So that's how I did my treasury. I started doing treasuries in October 2022. That was the first time, right? We came back and we looked at how to even buy it. We went and looked at Treasury Direct. All right, continuing. Fear and greed index still on the greed side. So time to be cautious. Next week earning, I'll be looking at a C Limited, Neo, CrowdStrike, JD.com, DocuSign. I thought we were done with earnings. But today morning when I went to Twitter and picked up this chat, I'm like, no, there are few companies that are reporting results which I'm interested to watch. So maybe next week we'll talk about it. Do you want me to bring up analysis for any other company?
Vivek.
Yeah.
Large corporations in the Bay Area are still firing tons of techies. What's going on? Is it a bubble still? Is it a bubble? They're still firing people.
So did you read what Klarna had to say? Klarna said that they have used AI and that AI had helped because they also fired people. They're not going to hire back the 700 customer service reps that they had fired because AI is doing the job of it. Okay. So one is that companies are becoming more and more efficient because investors are demanding. Like what Elon had shown to the rest of the world that you can operate Twitter at 50%, less than 50% of the workforce. Right? Once Elon did it, other companies had no choice. Second one was Meta. Meta was bloated. And Zuckerberg came and said, we need to cut down on our management layer. Then everyone started questioning in 2023, when the capital becomes tight, you start to look at all your inefficient ways of operating and start to cut down. We saw every company is cutting down on that one. So yeah, it was a lot of bloated companies. So they will. Not good for employees. I mean, I've gone through the same stuff because our company closed down the startup couldn't raise funding and we had to do layoffs. It's not a good situation, but at the end of the day, we are running business here, right? It's eventually your responsibility of a management is to shareholders, not to the employees. And I'm saying this as an employee who got impacted by layoffs. But I'm also an investor. So when I look at an employee, I'm like, gosh, they laid me off. But that's fine. That's what the business is about. Right. So companies are they are getting the the bitter medicine. Roshan says, okay, sorry, one more. Chandra, totally means have 30% cash left for future investing as and when market goes down and just sitting. I mean, today I'm going to share my portfolio because this is the first meeting after the end of a month. So you will see how much cash I hold. I don't hold 30%. That will be too much for me, but yeah. Anyway, Roshan say, where can I buy treasury? Does it have to be the bonds on Treasury Direct? You can do no Robin or third-party apps. There is a 20K limit for buying treasury bonds directly from Treasury Direct? No. So Roshan, you can buy from Treasury Direct. I think what you're talking about 20K limit, it's actually not 20. It's actually a 10K limit, but that is for I bonds. What I'm talking about is T bills or T notes or the bonds, not the I bonds. And you can buy this on Treasury Direct or you can buy it through a brokerage firm also. So many of the brokerage firm also support buying treasury bills or notes or bonds on auction, or you can also buy it from the secondary market using your brokerage firm. That's exactly what I did for my friend because there are no, if you look at it, I actually looked at Treasury TREAS Treasury Direct. There are no auctions coming up. I'm like, what government doesn't need to raise money? So that's how then we ended up buying from it's only 13 week, 26 week. There's no like 1 year auction coming up. And that's why we ended up buying from secondary market. He had an account in Charles Schwab, but you can do it, I guess, even TD. I have account in TD Ameritrade. They also allow you to buy T-bills from secondary market. Charles Schwab does that too. And there is no limit on how much T-bills you can buy. Warren Buffett is sitting on $170 billion worth of T-bills, right? So there is no limit. That limit is on I bond, but there are ways to get around that limit also. A WMT in a SPY chart looks similar. Both like WMT is also indicator of how our economy does. By the way, WMT split this week. So they had a split, so that's why you're looking at $60, and they had what 3:1 split. Right now, this is another one. There is some people want to invest in the stocks because they're going to split. If they're going to split, it becomes a little cheaper. I don't know what that math comes from. The notional value of the stock comes down, but the stock is not cheaper, right? But it attracts a different kind of investor. Few more investors who can't invest $180 now can invest $60, and probably I think that's the thesis that it will attract more crowd and go higher. Didn't happen with WMT, right? It was what, $60 or something after split. No, it's a little bit down. Snow tanked after earning. Any thoughts about that? I will talk about Snow. In fact, I tweeted about it, and it looks like for me, and I'm not a big Twitter guy. I only started getting on the Twitter bandwagon a few months ago, but it seems to be that was my most viewed tweet around Snowflake, which was around Snowflake. Any difference of outcome or expense cost in buying T-bill from Treasury Direct versus secondary market? You should check with the broker. Some brokers don't charge you any fee for buying bills at auctions. But you should check with the broker. Now, me personally, I bought from Treasury Direct. There is a reason for it. It's not that the TD Ameritrade will charge me. I just want to mentally and physically separate out some of the stuff. And I know that if I buy it on TD Ameritrade, some part of the time I will sell it because I found some good shiny opportunity to invest. And because it is on TD Ameritrade, it will be very easy to sell. So there is no friction. So I just wanted to compartmentalize it. And that's why I bought on Treasury Direct, that even if I get FOMO because I'm watching the market and I want to invest in, there's a friction involved in it. And I have to take additional step, go and redeem it, and do it. And I will not give myself into FOMO. That was the reason why I did on Treasury Direct. If you can buy it on your brokerage firm, but you should check whether they charge anything or not. I think on the auctions they don't charge, but my reason was completely different. I just wanted to save my portfolio from myself. You are the worst enemy of your portfolio, right? Wall Street is not, market is not. You are your worst enemy. Can't buy partial shares? Yes, you can. Not many investors know about partial shares. And T-bills versus CD, because that's the conversation I had with my friend. He's like, there is a CDs at 5%. I'm like, you end up paying state and local tax on CD. On the T-bills or treasury instruments, you don't pay state and local tax. And being in California, state and local tax is a big thing, right? You end up paying 9-10%. If you're in Texas, probably won't matter, but in California, it does. All right. So buys and sells this week, just from being transparent. I bought a little bit of a TLT and coupon. And this is how my pizza looks like at the end of Feb. I'll bring it back after end of March. Right. So SPY is number one, the biggest holding on my portfolio. And this is my all portfolio. I don't have short-term portfolio, long-term portfolio, public portfolio, private portfolio, hidden portfolio, open portfolio. This is all my portfolio. And cash is moved to number two because we utilize some cash. Then the Melly is one, then Apple. No, only change that has happened between Jan and Feb is NVIDIA has moved out because I sold some NVIDIA. I talked about it. And Palantir has moved in and in top 15. Dave, are you profitable with Melly yet? Yes, I am. So that's the top 15 toppings on pizza. I'll give you a few seconds to see it and see if you have any questions. And again, I do this every month just to be transparent because we do talk about stocks. I don't want to be, you shouldn't consider he's talking about the stock, maybe he's pumping his own bags. This is my bag. So if I'll talk about Dell, I don't own any Dell. And all right, no questions. As you can see, nothing much has changed in between Jan and end. On NVIDIA, when sold in Jan, do you feel regrettable to buy again? No, I don't. And I think I made it very clear why I'm selling a portion of it is I find NVIDIA is too overvalued, but that doesn't mean stock can continue to go higher. But then I don't want to sell completely, and I've not sold completely NVIDIA, right? I'm out of my 2/3 position. I'm still holding 1/3 as a schmuck insurance, right? Market continues to go higher. I don't want to look like a schmuck that sold everything. So I think I recovered whatever invested in a lot more. And I also have a way to continue profit if the craziness continues. But from a valuation perspective, I just can't justify it. So I sold some, made my money, and holding some. So I still hold Nvidia, but it is not in top 15 anymore.
Vivek, I have a question for you.
Yeah.
Do you use the same amount for each individual stock that you purchase,
What?
or do you
what
go
you
by
mean?
the shares?
No, so as and when my portfolio, grows. So here's where if I want to start my initial position, right, then I will look at a percentage of overall portfolio and see my first will be probably less than 0.5%, right? Then I'll see how the stock has done, watch its earning results, and if the stock is doing better and better, then I'll start to add more positions. And I will stop adding once I've brought it up to 2.5 to 3% of my cost basis, right? Not the value, but the cost basis of my investing, right? And then I'll let it continue to grow. So that is what I've been trying to do, is to do that. So it's not the amount, but it's a percentage.
So when you get long, do you add when it goes down or when it goes up?
Both ways. So if it goes down and I see that nothing has changed in business, then I look at the business and see if the business has performed well, I will add. So whether if the stock has gone down, fine. If the stock has gone up, fine. I've added in Palantir right from $6, not even six, I think $5.50, all the way up to $20, because they have been performing. And I didn't load up the truck on $5 because, hey, right that time it's a fairy tale. Show me the numbers. So that's how I do it.
Vivek, so are you sitting on like 11%, 10.9% cash, or what does it mean?
Yeah, that's like 10.11% is the cash waiting to be deployed.
And rest of these are all your positions like February.
Sorry. So these are, what is your question?
So are these your positions end of the February, or what exactly?
End of February, top 15 stock positions.
Yours.
Mine, yes.
Okay.
Yeah, I do it every month. Been doing it for what, 2-3 years now.
So this is your portfolio and you keep on shuffling that right now, but you still have SPY at the top. You don't sell SPY, even though it's all-time high.
No, I mean, I don't want to get out of a portfolio if it is all-time high. And the reason why I keep SPY, because, a lot of my retirement portfolio, I'm putting in SPY.
So do you hedge this account now or at the
No,
all-time
I
high?
do hedge. So I do hedge it.
What is your like hedge position now?
So hedging is using options. So I have a lot of negative deltas in XSP, SPY, in QQQ, right? So if market continues to go high, I probably lose on my option side, but my rest of the portfolio will grow. And now the hedging I'll deploy based on where the market is, what the market sentiment is, right? In 2022, I took off the hedges and was more on the buying side. 2023, on October and November, when the hedges lost, so I started reducing a little bit of hedges. Now I'm back putting decent amount of hedges. So if the market goes up 5%, my portfolio is not gonna go up 5% because I have some hedges in place, but I'm okay. So far, and again, since you asked, so I'm telling, otherwise I don't want to. So my portfolio is up more than almost 1.5 times what the SPY has done, and I'm okay with that. I don't have to be too greedy. And I'm like, okay, I just need to make sure I stay here. Let others make money in NVIDIA or SMCI or whatever, or AMD. I'm happy with what I have.
So is it possible you can share your hedge positions, like what exactly you hedge? Like, are you buying inverse leverage?
No.
hedge?
So leverage don't work. So let's say let's bring that up, right?
So like you are saying that the S triple Q leverage of
No
2.0
leverage. No leverage. These are all like call on 425 expiring 15 March, 430, 440 calls on QQQs, right? XSP, SPY calls on 480, 480, 485, 485, you know. And right now, that's one of my this account is a negative delta, which is fine. It means that market goes high, my this account will lose value, which is I'm perfectly fine with this because my retirement portfolio, other portfolio will gain in value. So I generally use sell calls or call spreads to hedge it. I don't do leverage stuff. The reason is leverage, you shouldn't hold anything leverage instrument beyond overnight or beyond a few days. If the market is volatile, your leverage instruments will most of the time just won't work. Those are very short duration instruments to be held only overnight, maximum a couple of days. Those are not to be inventoried. Unfortunately, a lot of retail investors will buy it, either the inverse or even the multipliers 2 times, 3 times. Those are not to be bought and held. Those are very short duration instruments. So I don't do leveraged.
What was
Could I ask for
what was the ticker number? QSP.
No, XSP is I mean, XSP, SPY, you can pick any index. So way I look at is when I look at my portfolio and then say I do a beta weighted, right? Beta weighting SP, you can do your, okay, now we're getting into using options to hedge your portfolio. So let me put this way. I covered this in detail in one of my bootcamp sessions, and you can access that bootcamp, all the 14 videos of that bootcamp session on recording on my website, where I talked about how do I use options to hedge my portfolio. So first thing is you need to understand how much of you need to beta weight your portfolio. Now, depending on if you have a lot of a tech, you will beta weight it to QQQ. If you have a lot of you are diversified, you'll beta weight it to SPY. I beta weight it to SPY. And then I use, and of course, I own a lot of a tech also. So I use QQQ and SPY, an equivalent of that, to hedge my portfolio. So you will see all my hedges is around QQQ. So this, like say 2022, when it comes to the options side of the house, I lost money in options. And which is perfectly fine for me because I made a lot more on my long portfolio. In 2022, I lost on long portfolio, but I made a lot on the option side. Right? So at the end of the day, it's a overall portfolio you need to look at. And I hate people coming and I see this all the day on Twitter. I made so much money in options. I'm like, how about the other side of a portfolio, right? so I look at as an overall portfolio. I mean, I'm a portfolio manager for my family, so I need to look at overall portfolio. So let me just bring up. So yeah, it's just a website I created so that I can post the content, option gig. If you go to bootcamp video number 14, and those who are new to options, maybe you can start with this one, because in this I covered right from if you're a newbie to options, how to use options to, all the way to manage your portfolio. Yeah, portfolio hedging. Right. Oops, don't want to start this here. But yeah, we spent 2 hours talking about how to use options to hedge your portfolio. So many of the things that I do is I cover that in that video. Hopefully that helped. Last quarter, okay. Operating margin 65%, unbelievable. Yeah, NVIDIA has been blowing it through the roof. I mean, and maybe next quarter they'll come back and say, we did it again. And kudos to Jensen Huang for doing it. If it delivers a number, great. But I don't have to feel bad about, oh, I sold something. I'll rather feel good about that I didn't sell everything. FOMO and greed is our worst enemy. And I just want to make sure that I don't get into this. You do not investment in bonds. No, I hold TLT. I have treasuries. So I do. There is there is a lot of leverage instruments out there because they make tons of money. Probably not the retail investor who hold it beyond overnight. Do you mind suggesting hedge trade enter next week or for a 20K portfolio as an example? It's a very difficult to just spit out an answer based on this question. And again, I'm not trying to avoid an answer, but it depends on, do you really need to hedge?
Vivek, so this question comes in my mind. Is it really good to hedge or it doesn't make sense? Like, what is the purpose of hedging? Is it really required for like small portfolios until unless you have like $1 million, $2 million?
No, so the question is, I don't think it's a question about $1 million or $2 million. The question is how bad you will feel if you lose.
If you're doing stock, you can keep them long. So you are not losing. That is a virtual loss.
No. So I'm saying when I say lose means if you're okay, because if you say I'm holding this for next 10, 20 years and I'm okay to see it going down to 10K, fine. Then don't hedge. But let's say if I were to, because now I'm doing this is my full-time work, I need to run my household expense, then I need to make sure I'm able to withdraw something from my investment account without I'm losing too much, right? So I will try to do a different way. So I don't think there is a one correct answer is always hedge or never hedge. But I will tell you one thing. There is always a cost to hedge. Now the cost could be that you are paying upfront price, means the cost basis of your holdings is going higher, which is like you buy insurance, which is like buying puts. Or the cost is that you may cap your upside, right? Which is like selling calls and selling covered calls and all that stuff. So, but there is no hedging which is free. So you have to pick and choose what you want to do. If you are okay with making less money and losing less, yeah, deploy hedge. But if you want to capture all the upside gain, then you can't be hedged. You can't have both, that I want to capture all the upside gain, but I don't want to, lose also. You can't get it. You can't have your cake and eat it too. So I have in my mind in terms of where the market is, how much deltas do I need in my portfolio, beta weighted SPY delta. And if I see my deltas going out of a whack, I'll sell some deltas and reduce it. And if I see some deltas going too low, which happened like on Friday, because the markets kept going higher, and I was like, oh, I need to add some deltas. So I went and, against my short calls, I sold some short puts. So that's all hedging is. This is like, and what we're talking about is what the professionals do. This is called your delta hedging, your portfolio.
So Vivek, I have a question. So I see you have a lot of technology stocks, right? Do you hedge against individual company stock or like hedge against QQQ?
So two ways, right? One is individual side. I will do covered call or call spreads, right, to get an individual level little bit of a hedges. But then there are many stocks that I hold, which are, I think overall I have 69 tickers, I would say, including ETFs and all that stuff. So that's why I deploy SPY and QQQ, because in some of the stocks I may not have 100 shares. Right? So I do both. So for example, on which one on on Apple, I have a strangle in place right now. Strangle means you have sold a put, you have sold a call. So if Apple goes down, I'll be happy to buy Apple below 175. But if Apple goes up to, let's say, 200, then some of my Apple holdings will be called away, which is fine. From until April 15th, if Apple goes to 200, I'll be very happy. Some Apple will be called away, I'll still hold some. Right? So I do both.
I see. Thank you.
Mhm. All right. So I said cash has gone down because we utilize the cash. We bought a new toy. So yeah, my other car, my daughter, she has taken to her college. So we were, we needed a car. So we ended up buying car on last week. And that's where the cash got utilized. I mean, that's what the investing is for. Right? You need to enjoy the gains. So we did.
Did you bought on Kavana?
Oh, no, not on Carvana. So because there are not many good hybrids. So we wanted to buy hybrid and SUV. And there are not many hybrid SUVs available because there is shortage of, the inventory. So that's where the cash got utilized. Anyway, quick updates on crypto, and I think then we'll quickly run through. So let me ask, because we've already, almost 11:30. Thank you, Nyanka. Thank you. Yeah, we love the car.
Do you want to cover some earning stocks this
Yeah,
week?
that's what I wanted to say. Because I didn't cover crypto last week. So I want to say, do you want to cover crypto? Or do you want to quickly go through the earnings and the Reddit S1?
Earnings I would prefer because
Okay.
crypto is only a double all-time high.
Okay, so I hear earnings. So we can come back to crypto maybe later on. So let's close that. Let's talk about earnings. Snowflake. Right. So we looked at a Snowflake. I think there was a question on Snowflake. So revenue was up 32%, gross profit was up 39%, operating income was down, gross margins up 13%. Guidance, what market did not like and killed Snowflake. So even if you look at a Snowflake, all the Snowflake valuation, and it was never cheap, was based on the revenue growth, and they're done great in terms of growing their revenue. They used to grow revenue at 100%, right? 80%, 60%. Now they grew revenue at 30. Now they come back to like low 30s, 32%, which is not bad. But if your valuation was, but for a valuation that Snowflake had, 32% is not good enough. Then they guided for a full year for 22%. Market was expecting 29%. So now if your Snowflake is going to be a company that's going to grow at 20%, then your valuations will be adjusted accordingly. So that was the one reason why the Snowflake had such a bad reaction after earnings. The other one was General Slutman, their CEO Frank Slutman. He's moving into chairman role. So essentially, he's having his fun now. And they brought in another person, Sridhar Ramaswamy. He's taking over a new CEO role. So CEO change. Frank Slutman, ruthless guy, great sales guy, knows how to sell. That he has taken Snowflake from where it, to where it is right now. So market was a little surprised on that one. And Sridhar Ramaswamy has more come from a product and engineering background. He was heading Google's ad business, grew that from $1 billion to $100 billion, has more focus on AI, which is the need of the hour, but he hasn't never directly handled sales. Not that, I mean, we'll have to give him a time. Great guy, probably will do good, but these are the two reasons. And I think the bigger reason was growing the slow in growth, right? So now it is stuck in low 30s and guiding to 20s. What else will happen? So the stock got punished. Then was looking at its, what else they have done in terms of some other charts. So look, this is what as a investor pisses me off is 1/3 of the revenue has gone in as a stock-based compensation. If you look at this revenue, almost $800 revenue, right? $774 million, and 300 million is a stock-based compensation. I don't want to invest in a company like this. I know Snowflake has been a darling of the street, but I don't want to invest in a company which is like, are you working for employees or for shareholders? Now, they've been touting free cash flow, but you take out this stock-based compensation, which is in fact a cost to the company as an investor. It's an expense to me. Their free cash flow has been negative. It's like artificially bumped up by stock-based compensation. Looking at the trends, never made a operating margin, never profitable on operating margin basis. Means you will always be dependent on kindness of others. Either you will have to dilute your shareholders, which is what they've been doing it by doing share-based compensation, because you need money. You're not generating money through your business. Or you'll have to raise debt, or you'll have to do a secondary offering. None of these are good outcome for as an investor. I'm not even talking about net income. I'm like, do at least run your operations profitably. And all these were and can be overlooked if you're growing your revenue 50, 60%. Right? These things cannot be overlooked if you're growing your revenue at 20%. And that's a reality which Snowflake is facing right now. Now, all your sins, which were overlooked, now they are coming in upfront and say, guys, why should I pay? What's Snowflake value trading right now?
75 million.
In terms of
70 million.
No, 70 billion. It's a price. Why should I pay 21 price to sales for a company that is telling me that they're gonna grow at 20% year over year, revenue at 20% year over year? Why? For me, probably there are better opportunities. Look at Meta grew 25% year over year. And that's like 9.49 price to sales. Why would I invest in Snowflake and not in Meta? Why would I invest in a company that is like giving 1/3 of its revenue to to enrich the management? Dude, those are my shares. And you're giving it to employees 1/3 of that? Doesn't make sense to me. Snowflake valuation never made sense to me. I never invested in Snowflake. But they were growing. So all your bad habits, no one looked at it. But now if you're not growing, people will start to question, and that's what happened. If they come back onto the growth mode, I think everyone will just move on and say, yeah, that's fine. Let's enjoy the party. That's what happens, right? So as long as you grow, no one cares about it. They say eventually we will make profit. You just keep growing your revenue 50, 60, 70%. Eventually we will. But then if you don't have a revenue growth, people and then investors start to think, oh, that eventuality is not going to happen.
One question I have is like basically on what basis you calculate what is the fair stock value? Is it like, do you have any tool? Like
no, so I think probably those who have analysts. So there is ways to do it. Most popular is a discounted cash flow model. I don't have a tool, but I think there are some Excel sheets available which you can use. But again, that's little half art, half science, because you have to make a lot of assumptions on how the business is going to grow, what's the outlook is, how much are they gonna, margins will be and all that stuff. What I do is on the other hand is forget about it. I don't want to guess what's in future. I want to see what is priced in today. That is called a reverse discounted cash flow. Looking at a stock price right now, how much growth of your free cash flow has already been priced in? That I can tell.
So the question I ask is like revenue, NVIDIA EPS was going 222%, and now for next year it is going only 8%. So that is already priced in. So now how do we calculate this in the future stock? Like is stock not going to grow more than $800 and it's going to grow only 8% next year? Or?
No, so if you want to do on a future, and again, these are all valuation. Stock price could be anywhere. So these are different things. Pricing and valuation is different. So, and your valuation may say that NVIDIA is overvalued, because today, to satisfy the NVIDIA's valuation, they need to generate $400 billion of revenue. What's NVIDIA revenue? Annual revenue today, NVDA.
I think $20 billion per quarter.
So overall sales is $60 billion. To justify this current valuation, they need to have a $400 billion of revenue. But the stock price could be very different from the valuation. So, and there are valuation techniques. DCF is one technique. Your comparable asset pricing, another technique. But most of the time I see nowadays is a DCF being used. Again, better will be to talk to someone who has been in as an analyst and not a techie guy. So, but yeah, I'm trying to do whatever I can do as a retail investor. But yeah, DCF is the most widely used model that I see CFAs using it. Many people in IT say Snow has a great products. Yeah, Guru Focus is get a DCF on other fundamentals. Yeah, yeah, you use Guru Focus then. I feel Snow is sunsetting like Tableau. Yeah, I don't know. Snowflake was trying to replace the data warehouses and all that. I don't know how much is the play in AI. So today market is only looking at AI. And they didn't get that AI vibe from Snowflake. And I think they punished it because, hey, I will invest somewhere else. But at the end of the day, as an investor, you're a capital allocator. I'm not married to Snowflake. If you're growing at 20%, and with a negative operating margin, I have other businesses that are growing more than 20% with a positive operating margin, returning cash flow, not diluting me, then why would I invest in Snowflake? Right? That's a question you need to ask as a capital allocator. All right, other one, and these are quickly, I'm not going to go through the details. Coupang. Coupang is fondly called as Amazon of South Korea. This is basically e-commerce company, operates in South Korea, now moving into Taiwan. So revenue was up 23%, gross profit was up 30 to 31%, operating income was up 56%. So overall, all results were good. And I think the stock also was up from 14-15%. Good to see them turning the corner around on operating margin. And that's what I think 2022, many of these high flyers, they got the memo, is tighten your belt, guys. Tighten your belt. We can no longer afford investors are demanding. We're not going to overlook you throwing money around. Right. So if you hear Bom Kim, who is a CEO, and go back and listen to like 2022 earnings call, he made it very clear that they're gonna run ship very tight, and now that's actually showing in numbers. Okay. So I own the stock. I added a little bit, as I mentioned earlier, that this week I bought a little bit more of a coupon. It went up, and I still bought it because hey, numbers are performing now. The business is moving in the right direction, so I don't mind adding more to my portfolio. right? And those are the financial numbers. Even the business metrics look good. Active customers were up 16% year over year, up to 21 million. They have two categories: product commerce and developer offerings. And their experience in Taiwan, it's been doing good. So maybe once they establish in Taiwan, maybe they will then start to expand further. But I like that they have a measured approach, and I like the thought process of a CEO, and I'll continue to own it. All right, any questions on Coupang before we move on to the next? Okay, all right. Any Coupang holders? Okay, Zscaler. Again, one of this is a security company. Probably I should say not pioneered, but made it, or maybe popularized the term zero trust security. Those who are from a cybersecurity professionals probably can explain much better, but now the name of the game is, I'm not gonna let you access every room once you enter into the building. Every time you want to access a resource in my network, I'm gonna ask you who you are, show me your credentials, I'm gonna authenticate you, make sure you're authorized. So that's like zero trust, no trust. Olden days, once you get into your corporate firewall, we'll make sure we have the biggest lock in front of the door. Once you're in the door, you have access to the whole office. You have access to all the resources. Not any longer. Nowadays, it's a zero trust is what all cybersecurity companies are moving to. Zscaler, I would say, popularized that term. I don't know if they were the pioneers. I'm not a cybersecurity professional, but the revenue was up 30%, 35% to almost $525 million. Gross profit up 36%. Margins were like gross margin at 77%. These are the software companies. When someone says me that a company deserves a software company like valuation, I go back and look at, are they delivering the margins like that? Right? Gross margin 77%, right? That's great. Look at SMCI, what their gross margins are, what their operating margins are. SMCI gross margin, I think long back 2-3 weeks ago we looked at, right? It's like mid-20s. I'm like, why does it have a valuation like a software company? But pricing and valuation could be different. Net income was up 50%, still not making any net income, not making a operating income, which is what I don't like. That's why I don't own it yet. Still not making money, but it's trending in the right direction. Now, some of you could be more, have a much bigger horizon and say, maybe I want to own it. Great. The trends is in the right direction, but still they are not doing a business in a way that they can survive on their own. Right? They will still dependent on kindness of others. They still need to have a ventilator. They can't breathe themselves because the operating margins are still negative. Means you need to always have external help, which could be fine. Hey, I'm just a kid, right? Just born, no newborn kids still need a help to survive, but I'm gonna grow up and deliver a lot more. You want to take that risk? Great. But if you don't want, it's good to look at this rather than blindly putting money in it so that you know what you're getting into. Stock-based compensation, that's a little bit of a concern. Guys, they started to increase the stock-based compensation, but I don't have, maybe I should find a way to also plot what's the overall share count, diluted share count, so that we can see in the net, are they increasing the share count or are they reducing the share count? Because they could offer stock-based compensation and buy back the shares. And this is the one, trick many companies will use. They'll announce, share buyback. Now suddenly you think, oh God, this company is going to buy back shares. Going to be good for us. But on the other side, they're going to issue the same amount as a stock-based compensation. So net as a shareholder, there is no difference. So no, yeah, so they have been increasing, they've been diluting shareholders. They have to, because they're not making any operating income. They need a way to generate, to raise cash, right? Sorry, there was a question.
Could I ask something about, yes, with regard to the stock-based compensation issue, can't that though serve as an incentive for effective management? I know one of the raps on the Disney company is that their board members and high management allegedly don't own a lot of stock. And that may have played into the poor performance of the company. What do you say about that? Not about Disney in particular, but about stock-based compensation as an incentive to propel the stock and the business forward.
So I agree that if you want to incentivize, there are two ways to incentivize. You can also incentivize by paying cash. Let's give them a cash bonus if you want, right? All I'm saying is it is a cost. It is a real cost and real expense to the business. So don't hide it and don't show it. You know, what the companies will do is they'll tell you adjusted EBITDA number, in which they will remove the stock-based compensation and say, hey, our adjusted EBITDA is like up 15%. I'm saying don't do that. It is a real cost for an investor. If include that as your expense when you report your number. If you do that, then I'm okay with it. Yeah, but because
right. I see your point, and I don't hear analysts very often even talk about this this expenditure.
So here's a question, and here's my gripe with analysts. And you can tell me, hey, because I'm not from that industry, so I don't understand how that works. That's fine. If as an analyst, if I start to ask very tough questions to the management, next time will that CEO grant me an hour of interview? No. Next time, if I reach out to the management or that company and say, hey, I want some scoop, will they entertain me? No, because I try to make their life hell. So
that's a very good observation, because if you ever listen to the earnings calls of major companies, the analysts are often very sycophantic in the questions they ask.
They will play along because they want to have that access to the management so that they can bring about and create the reports, right? If you lose access to the management, then you don't have any dues, and what reports are going to generate. Analysts are not thinking for shareholders. They are thinking for themselves. Analysts are probably thinking for the investment banking business that their brokerage firm, Goldman Sachs. Let's talk about Goldman Sachs analyst. Right? They are thinking for how much investment banking, and I know there are laws that tell that your investment and your research business have to be separate, but we all know how easy it is to circumvent those laws. So if analyst is putting out a report and he goes really tough on management, the company will say, okay, next time share offering, I'm not going to hire Goldman Sachs as my lead advisor or something, right? You understand? So I don't pay much attention to what analysts, I pay attention to the questions and answers, but generally the tone is very meek when analysts are asking questions, because they don't want to lose access to the management. If I'm a Goldman Sachs, I have a tough question. Next time management is not going to pick up my call, but they're going to pick up my competitor call and tell them, of course, it'll be public information, but they'll be able to do a Q&A with them, but not with me. How bad I look, right? I lose my job. So that's why analysts won't ask the tough question. But coming back to the stock-based compensation, most of these management, they'll hide it under adjusted EBITDA. They will remove this component as if this is not an expense, right? That's what my problem is. Guys, it is a real expense as an investor. To me, it is a real expense. You're diluting me. So if you need to give it to your employees to keep them motivated, sure. but then come back and say, yeah, this is a real expense. Don't try to, circumvent this and show me adjusted EBITDA number and say, hey, everything is good. No. All right. So why the stock fell down?
Vivek,
Let me
we-
just finish the
Right.
Zscaler one, and then I'll take your question. Why the stock fell down, whatever, 9-10%, because the guidance on the bookings was light. Again, you're not making any money. It's all because of a growth, and if your guidance is light, market has no patience for it. So stock was down, whatever, 7-8%. Sorry. Yeah, Sam. Sam, you had a question?
Sorry, I'm typing it in. Okay, I'll just say it. We learned in business school that they're not allowed to dilute us.
Whatever. So I tell to my kids, whatever I learned in engineering school, I never used it. I guess same is the case with the business schools. All right, coming to Li Auto, which was my latest addition to my portfolio. I moved some of money from the other EV, Chinese EV, into Li, because Li was one of a few EVs that are actually operating profitably. They're making operating income, they're also making net income, which I was surprised. I thought all this new EV is such a tough business that it takes years and years to make money. So either they are fudging the numbers or they're really doing something good. So as you would recall, I told you guys I've did a took initial position Li Auto, and now I'm trying to learn a little more about the business. It's like less than 0.5%, right? My initial position. Now, if I get to educate myself more on the business, what they do, what kind of cars do they sell, and all that, maybe I'll increase my position. So, but one thing is, because it's in my portfolio, now it reminds me, hey, they reported earnings, so let's look at the numbers. So revenue up 136% to 41.7 billion RMB. It's not dollars. Gross profit 174% up. Net income up by 1,000%. All numbers look good, right? EPS up by 2,000%. So and this is one of those fewer companies, EV, that seems to be. Now I need to figure out what different they are doing it. I haven't spent much time on this one.
Do you believe in China EVs then? Then if you believe in Li, then what about Neo?
I have Neo.
You have Neo?
Neo is one of my best performer in terms of, and this is the way how you want to look at it, right? Neo, my cost basis is negative because they
What
are.
is the cost basis? Can you repeat that?
Neo, my cost of owning Neo is negative because I've sold so much options in Neo over years. I've held Neo for what, 4 years or probably more. And I've sold so much options on Neo. Let me just bring up and see how much since when I've been holding Neo, that I've recovered all I have invested in Neo and more. That my cost basis, it means the cost of owning the stock, is actually negative. So now the question is, I have Neo, I have Xpeng, both. But when I looked at the Li Auto, and I'm not adding additional capital into this, I'm recirculating my capital, which is towards the Chinese economy, into the same. So I've sold calls on Neo and Xpeng and using that money to sponsor the buying of a Li Auto because I don't want to increase my Chinese exposure. Yeah, so Neo has started in 2019. Right now, my cost basis is negative $1.25. So every time Neo goes up by a cent, I make what, infinite percent because the cost basis is negative. Right.
But you still believe in this Chinese EV stocks? Like, don't think bank goes bankrupt?
See, Neo goes bankrupt. Neo is a lottery ticket for me, right? It goes bankrupt, it's fine. I have zero. I'm playing. In fact, Neo is paying me. Market
Yeah,
is paying me
yeah.
to own NEO.
In general, like for a new beginner.
So these are not my big portions of my portfolio. At the end of the day, it's your position size that matters. I'm not gonna have it like 3% of my portfolio. Lee will never become 3% of my portfolio. If it is less than 1% or 2%, yeah, I can take that gamble. So if it goes to 0, that's fine. Will I be wounded? Yeah. Will I be, it will be fatal? Absolutely not. So one lesson that I learned in my investing is forget everything else. Position size is the most important. You can go wrong on every aspect of investing. You could have picked the worst stock. You could have picked up the stock at the worst pricing. But if your position size is okay, you will survive. You will still survive. So I focus a lot on position size. That is why you don't see me. And it got both ways, right? I probably don't run a very concentrated portfolio. If I had NVIDIA 15% of my portfolio, I could have retired. But the alternative universe is, what if I could have maybe bought Snowflake at 15%? How do I know which is going to be Snowflake, which is going to be NVIDIA, right? We don't know until the business has proven themselves. So for me, position size is the most important lesson. So if NEO goes out, anyway, NEO is house money. If Xpeng or Li Auto goes out, fine, I'll still survive. So yeah, so the numbers last 4 or 5 quarters are looking good. So probably I'll have to study a little more. Asif says Lee mostly since plug-in EVs. Do they have pure EV yet? So Asif, I have not studied Lee business yet. That's why I have not added my position in my portfolio. It is like 0.21 of my cost basis. So 0.21% is invested in it. That's fine. I'll study more before I add more to it. But just that I bought it because so that it's on my radar. Magnite, for those who don't know, this is called as a opposite cousin of the Trade Desk, which is an ad tech company. Magnite is a sell-side ad tech platform, and it goes the way the ad market is gonna go. So revenue was up 7%, gross profit up nicely 82%. Again, not gonna go through all the numbers, but looks like maybe they are turning the corner around in terms of operating profitably. Is the first time that they've been able to, first time after a long time that they were able to show their operating margin, because they were doing some acquisitions over in 2021. They did a couple of acquisitions, and then the whole ad market saw in 2022. So that impacted Magnite also. Now we will see how it performs, but so far happy, I'll hold it in my portfolio. Again, the thesis is this, right? If Trade Desk is on the buy side platform, we don't have anything equivalent on the sell side, and the Magnite is the biggest one on the sell side platform for a kind of an ad exchange, right? Running the automated ads, and which is independent of these walled gardens, right? Google is there, but then Google is a walled garden. Meta is there, then you're restricted with the Meta properties, right? So Magnite is not one of those walled gardens, but this is on the buy, it's on the sell side platform. I think competitor is like a PubMatic and stuff like that. Chandra's position sizing mean buying small position, I keep increasing position size. Yeah, that is a way. And other thing is, if you don't go too big unless you really, really, really know and know ins and out of the company. Even if I know ins and out of the company, I don't think I'm gonna invest 20% of my cost, into any single company. A company could grow to become 20% of portfolio Probably I will keep it. I don't think even I keep that. I don't think I'll be comfortable with more than 15%, but I'm never gonna invest 20% of my investable assets into any company. Any individual company, an ETF SPY grows, that's fine. All right, so let's we'll skip this one. Let's jump on. Oh, it's already 12. So maybe do a Reddit S1 next week. I don't want to hold you guys. This is a weekend. I really appreciate you guys spending 2 hours. So want to be cognizant of your time and be around for another 10-15 minutes for any Q&A, because I don't think I'm gonna finish the Reddit S1 review in 10 minutes.
What is Reddit?
Sorry?
What is Reddit?
Oh, Reddit, the social media company, they filed their S1, right? So they're gonna raise, they're now be traded in public market. So they're gonna raise money from the market. So wanted to do a review. Maybe I can do a quick crypto review. That will take 10 minutes.
Reddit will be preferred more.
Sorry?
I prefer more Reddit than crypto.
Yeah, Reddit will take longer. That's
Oh,
so maybe we'll do it next week. I see another call. What would you call these trades? We'll close ASML on Monday. Got here by rolling. I call it calculated risk. Invested on a 60.6 transaction. Okay. NVIDIA 650 put, 720 put, XOXL, NVIDIA this. But how much of, what's the premium? Okay, this is quantity this. Which column has premium? Cost. Okay, so this is the premium. Yeah, so anything, forget about premium. I just looked, what's the deltas of this? So here's my thought process. And I've seen investors going and selling 5 delta puts or calls, right? Because, hey, you have like 95% probability of profit on that. So why not? And in some cases, like big stocks, like let's pick up maybe SMCA or NVIDIA and see how much is the 5 delta calls show up or puts, sell for SMCI. Let's go to April. I'm going to April, 19th March. Let's say, let's sell what, right now there's a calls queue. So the calls will be more expensive than puts. Okay, 200, 250. Okay, they don't have anything beyond 1600. Anyway, so I can't take that example. But so anyone trying to sell 5 delta, less than 5 delta calls or puts, that's what I call as picking pennies in front of steamroller. It will work almost every time until it doesn't. Now the problem with that is when it doesn't, it will take away all the gains that you have done in a previous trade and a lot more. And we don't hear these stories often because it happens once in a while. Right? Imagine you've been doing this, again, not just you, but just an example. Someone has been doing this 5 delta puts because they're bullish on market. And suddenly you end up into March 2020 situation where the market drops by 30%. You'll get wiped out. So these are the trades which I call as picking pennies in front of steamroller. These are the trades which give options a bad reputation. So you need to understand, and there is not enough of a premium to take the amount of risk that we are taking in here. And many traders get attracted to it because, hey, it worked. first time, it worked second time, it will work 10 times in a row. Right? When you're okay, I'm talking about option selling. So it'll work 10 times in a row. Right? But when it won't work, and then it'll basically take away a lot more. So I don't do these 5 delta trades. Right? And again, that's just me. And I don't want to do it 10 times and 15 times and then end up in one situation that I will regret. I rather learn from other people's mistake. So there's I think Day Street Trade, they had something called Karen the Super Trader. That is an example that comes to my mind. She allegedly made a few millions of dollars selling these 5 deltas and 10 deltas strangles. And then later on, I think some investigation revealed that not all that was actually green. You can't continue to make money on these 5 deltas, 10 deltas. Once the situation if it goes against you, that'll become fatal or devastating. And I don't want to put my portfolio in a situation where it could be fatal. Okay, Bobby said let's do crypto. Okay, we'll do crypto. So you are selling weeklies. Weeklies selling, Dave, is only for hedging trades. My regular trades are all right now, April. I'm not doing anything more on a March, but my regular, let's say a strangle or iron condor, or if I want to own a stock, I sold 25 delta or 30 delta short put. They are all April expiration. Weeklies is my delta hedging trades. So that I've done on QQQ, SPY, but not on, let's say, ASML or MELI or individual stocks, that's all my April ones. Dave, I only stick to ATM or at least 30 delta. Yeah, 30 delta is good enough. Again, it depends on risk profile. I am little bit conservative, which is little oxymoron, because hey, you deal options and you call yourself conservative. People don't understand that. No, I'm a conservative investor, guys. I don't take lottery tickets, and I don't go. I'm not here to make 30%, 40%, 100% return in a year. I think 2023 I made more than 40, but anyway, you get the point. I will never get an opportunity to come and brag and say I made 200% in my options. Well, that is fine. I just want to be here for next 20, 30 years, not getting wiped off. Dave, you can go long on call with Delta. Yeah, you can go long, right? But that's buying a lottery ticket. Dave, you know that, right? Buying a lottery ticket, yeah, you can buy it. If you bought a lottery ticket in SMC, it probably worked, but I don't know of any person who says that I'm going to run my household by buying lottery tickets. No, you go to work. Right? That's selling options, the hard work. If lottery ticket works out, because right now situation is different, good for you. But long term doesn't work out. Yeah, Karen the super trader. She used to sell 5 deltas, 10 deltas. All right, let's jump on to crypto. And that will be
why somebody is saying that I am buying SQQQ 19 Gen calls for 2026. Like, is it like inverse long calls? Is it worth it?
So here's the deal. Buying options in long term, when I say long term, means not the leap dated, but like over and over again for your investing just doesn't work in a long term basis. It's the selling options that work. Buying is easier, require less work, has a limited risk, but it is because you don't end up making money in a long term. And that is why majority of the retail investors don't make money in options, because they all buy. Ask professionals. They all sell options. They don't buy it. Buying works once in a while. Yeah, it is a limited risk position. It is a limited risk for a reason, because it doesn't generate returns also. So I would rather understand how to contain the risk and do the right thing rather than trying to do an easy thing which doesn't work in long term. So selling as unlimited risk? No. You can always limit your risk, right, by doing a spread. So that's how I started. When I started selling, I started with the spreads until I understood, became a better investor in terms of managing a risk. Now I can also do naked. But I understand my risk. I manage my deltas. But if you don't want, you can do a spread. You can limit your risk up to whatever, $500, $1,000 per trade. So yeah, when it comes to options, that's why, maybe like less than 1% of my trade will be actually buying. So I'll sell. All right, quick crypto updates, and then we'll end the session for today. First, on the ETF side, those 9 Bitcoin ETFs, they continue to draw a lot more inflows. And here's a stat that blew my mind. GLD, which is a gold ETF, it held a record for fastest $10 billion asset under management for decades. It took them 3 years. Just 3 years, they will $10 billion. Now, BlackRock, IBIT, got $10 billion in 7 weeks. Come to think of it, BlackRock got 10, and I yesterday went and looked at the BlackRock and their BD, IBIT. It already has $10 billion worth of asset under management, and it's just 7 weeks. These guys were launched in 10th of January, and we are now, end of Feb, so 7 weeks, they got $10 billion. So a lot of, I would say, dollars still flowing into these Bitcoin ETFs. Overall, yeah, IBIT is $10 billion. GBTC has been old, so we can ignore that, saying, hey, that's been around. That's why it's $27 billion. Fidelity, FBTC, $6.4 billion. ARKB, which is ARK Invest, $2.1 billion. So if we add up these 9 new Bitcoin ETFs, 10, 6, 16, 18, maybe 20, let's say close to $22 billion as an asset class in ETF, which is great. And no doubt the Bitcoin performance itself, probably it is the best performing asset year to date, except NVIDIA, I guess. So they're all up almost 35% year to date. Right. Bitcoin price, again, doesn't really matter what it does in a week or something, but some people are interested. So it's been up more than 60K, and it's been holding this for last 4 or 5 days. Now the question is it going to go higher? Is it going to go lower? You can make your own judgment. This is a long-term play, and I don't want to hazard any guess on what's going to happen in next week. What I also heard yesterday was, right now, not all brokerage firms or platforms actually allow users access to this. Vanguard doesn't allow it. I don't think they're going to allow it. Maybe new CEO will. Vanguard CEO has decided to retire, and maybe new CEO will. But Morgan Stanley and Merrill Lynch, they probably are planning to open access to these ETFs on their advisory platform. Right. So that's probably will bring in some more folks who did not have access to this, now will have access to it, and maybe some of them would like to allocate. Right. So that's on the Bitcoin side. The biggest story on the Bitcoin is this on the people, the what do you call as normies, right? The traditional financial investors and those who've been watching and ETFs have been completely blown away by the amount of money that has flowed into these ETFs. And it's not done yet. So the next big event coming up on the Bitcoin is called Bitcoin halving, or I don't know. I still don't know whether it's having or having, whatever it is. So looks like this is not even an English word, but who cares? This community doesn't have English word. That we have a hodl, not hold, which is expected to be somewhere in April. That's based on the block generation, the number of block, but I think based on Bitcoin halving somewhere in mid of April somewhere. Oh, come on, forget about this. Expected to occur in April, like that I know, but there's a website I forgot where you actually have a which calculates how many blocks are generated and how many are pending. So, but anyway, in mid of April, somewhere the halving is expected to generate, means the number of Bitcoins that are being produced is going to be slashed into half. So this thing has never happened in the history of commodities, that the supply of the commodity is actually being reduced, except in cases of famous painters like, Andy Warhol, Van Gogh. You can't produce those paintings anymore because those painters are no longer around, right? But in all other commodities, gold goes higher, the supply will go higher. In this case, supply is going to cut into half. So some FOMO may be there, who knows? But that's all. Ethereum, again, a cousin of Bitcoin. Bitcoin is a leader and Ethereum also follows it. So it's been up more than 3K for a couple of weeks. There is a conference going in Denver on Ethereum from 28th till 2nd. So I will probably read up on that one over the weekend and the next week to see what progress has been made in Ethereum community around their scaling solutions. There are a lot of stuff happening on Ethereum. Those who are more interested will probably get to hear words like dank sharding and proto dank sharding. So I just need to know where are they, when are they going to launch and all that. Probably will not going to deepen that. If you're interested, maybe we can talk about it. But I'll catch up next week once the conference is done to see what's happening in that ecosystem, and we'll talk about it. But that's a quick update on the crypto side. ETF is all the rage right now in Bitcoin. Okay.
One question I have: do you have like Oracle? Like, do you believe in Oracle business model?
Believe in
Oracle business model?
So talking about Oracle company, or because Oracle means something else in crypto?
No, Oracle company.
Oracle company, I mean, their business model was great in terms of selling and then basically doing a maintenance.
Because next week we have this Oracle and JD are the big ones that are like big movers for next week's earning.
Oh, okay. Yeah, Oracle is reporting next week?
Yeah, I think so. 5th March.
Then is it Oracle not a big company to show up on this one?
I don't know. It's a $306 billion company. I don't know.
No. I'm saying, why does the earning whisper actually, they do a good job in
that also
mentioning all the anticipated. So
7th March is the earning.
Yeah, maybe market is no longer interested in Oracle. So now, so the Oracle, only thing that I'm going to look at Oracle, and I was invested in Oracle earlier.
Yeah, there's a gap on upside.
No, I just want to look at how their Oracle Cloud is doing. They were doing good on OCI over last 2 years. I know I bought the stock, I enjoyed, and that's what the issue. I bought it around 50, 50s, mid 50s. Then I had to clean up one of my account, Robinhood account, and I bought it in Robinhood account, and then I cleaned that up and I sold it, and then I didn't buy it initial position, and it went off. I forgot about it. Yeah, but my thesis on Oracle would be their OCI, and how are they competing in OCI against the others? That's my only thesis will be right now on Oracle.
So do you still believe the gaps do fill? Because the last earning, there was a gap from 125 to 110 when it went downside. That gap is still pending.
So I'm not, again, I don't pay attention to gap fillings. I'm
Oh.
not that kind of a trader. So I would pay attention to the business segment and are they able to, grow their OCI or not. Otherwise, what's there in Oracle right now? That's the only thing that's market is giving premium to Oracle, but price wise it would go up. But again, that doesn't work on the long term. Sam, can you explain better how AI took your job? Oh no, my job was even before AI was when so we were in a startup, Series B startup, couldn't raise funds. So we had to just, wind down the kind of company. Now only founders and a few of other people are left. Me, my boss, my peers, we were all had to do thank you, goodbye.
Excuse me, but weren't you a techie?
So I was running the I was heading the professional services customer post sales department. So I had a lot of techie people in my team. We'll implement a product for a customer. We'll go do consulting work with them. I also headed the customer support team, means running 24/7 support team from US as well as team in India.
Well, how could they get rid of you? You're doing something substantive. I mean, because what I get from Gemini and Poe, it sucks. They're not accurate most of the time.
So the company we couldn't raise our Series C because the funding has simply dried up, right? And our product was, I mean, it's still a startup. We're not making money. I mean, we had a 35 customers. We were handling customers. We had even customers in the government and in big pharma companies. Not that our customers were small, but just that if you're not in AI, there is no money for a startup to grow, right? So we just ran out of money, and I have no ill feelings about my boss or the CEO who had to take a decision. Guys, this is a business decision. It has to happen.
Because I thought you were a programmer of some sorts.
No. Most of my life I've been on the post sales side on implementing products for customers. So I had implementation teams that work for it, but I'm mostly on product implementations.
Thanks.
The other name would be in the tech side, you have a professional services group. So that's what I've done, post sales, heading professional services groups, and a little bit on setting up program management for startups. So that's what I've done my whole life. So yeah, I'm not a financial advisor or never worked in a financial services industry. Oracle is chanting AI. If it is a software company, they have to. AVG has not listed the XDD date either. Okay. All right, I guess that's it for today.
Vivek, I have a question.
Sure.
For all the technical analysis and like your day-to-day, which are the subscription you pay that's useful? Like you think, yeah, this is worth my money.
So only subscription that I have two subscriptions. One is that one I subscribed like years ago with motleyfool.com, but that's nothing technical. That was more around, I like the way they look at a company and focus on business. So sometimes if I have to do a deeper dive study, I do use some of, go and study in terms of what they have to say, because they actually have a real analyst, they have a CFAs. So I do draw some information from them, but that's more of a very long-term business focused investing, not technical. The other one that I have is a Finviz because I can get a lot of data from Finviz. Beyond that, I don't have any other subscriptions.
Thank you.
Chandra's question on option selling. Do we need to hold till the expiry to make money? Nope. So Chandra, I think you should go look at that boot camp because I've covered all this in boot camp.
Got it. Sure. Thanks. I'll do
So
that.
start with the first one because that says if you're just a stock investor for years, which is what I was, what are some of the trades you can get in and not take any additional risk that you would take as a stock investor, right? Then slowly move on to, on the option side of the house.
Okay. Actually, I burned a lot actually with the options. I did only the, one side naked calls or naked puts, and it's bleeding. I don't know how to repair also. That's, start learning, but I'm learning after the burning. That's the only thing.
Yeah. I mean, it is not easy. If it were easy, everyone will do it. Or the things that are easier don't end up making money in the long term.
True, well said.
Yeah, so we have to pay our tuition fee either to the market or pay our tuition fee via the amount of time we spend in learning. So yeah, we've got to put in time.
Yeah, it's someone also says, you're paying for university. That is kind of same thing to the market.
Yeah.
Yeah. Thank you, Vivek.
Cool. All right. I guess that's it for today. Anything for next week? Anything specific for next week? Okay. Any recommended books on option trading? I've not read any book on option trading. Mostly I've learned by doing. There are good videos on option trading. Follow Tastyworks or Tasty Trade. They are the gurus. I mean, I consider them as my gurus. I learned everything from watching them.
Yeah, I also recently seen that Tasted Trade now like a platform signed up and everything. That looks good, but how is the experience like in executing the trades? Do they fast and at least especially spreads?
Yeah. So executing the trade is not an issue, but what I only subscribe to Tastyworks because I want to pay my tuition fee to them. I learned everything about options from them. So the only thing which I don't like from them is that I've not got comfortable on charts over there, right? So that's what I don't do it. Use Tastyworks for chart, etc. But from an execution perspective, I've not seen much difference between Tastyworks and TD Ameritrade. I use these two platforms for my options.
Okay. But I like the TV. The TV section was really
Oh
good.
yeah.
And
Oh, you
that's
can just you don't have to log into the app. You can just go to tastytrade.com and watch their live stream. They've been doing it for years, and every day. And I love some of the sections, around confirm and send, the Q&A part of that, option jive, which is great. Market measures are great because they'll bring on some, market research is great. They'll bring up research done around multiple topics around options over 20-year, 25-year of data. Right? Dave, go watch Trader TV live. Yeah, on YouTube. Yeah, exactly.
got it. Okay.
Cool. All right, guys.
Wait,
Good weekend.
one last thing, Vivek. TD Ameritrade has paid a lot to get their option platform spread, and now they're gonna fold up to Charles Schwab. What do you think?
No, they will still gonna keep Thinkorswim. If they're not gonna keep Thinkorswim, I'm gonna quit Charles Schwab. They will still have Thinkorswim that they confirmed that they're not gonna, get rid of Thinkorswim because this
they're not getting rid of Thinkorswim, but the rates are different, right? If you talk to TD Ameritrade, they say you're keeping the same options fees. I have substantially lower options fees and futures fees, right? But if you talk to Charles Schwab, they say, oh, the new rates are 65 cents per option and $2 something for futures. It's a little scary right there.
Oh, if they're gonna change my option per contract,
I'm out of here.
So here's the deal. I got an email from Charles Schwab last week saying March 10th or something is my date on which they're gonna migrate me. I'm like, gosh.
No, I think it's May 10th, not March 10th.
No. I think for me, I think they're doing in batches. So obviously they're not gonna do, move everyone. I mean, we have done many migrations, right? So I'm scared. With migrations, even you think everything will be looking good, you end up, there will be some issue.
So let us know.
Oh, sorry. So no, you're right. It's May 10th.
Yeah. Because I have a few account move already last year, but those were non-trading accounts. The rest of my accounts are moving on May 10th. Yeah.
No. So yeah, May 10th. Sorry, my bad. It's May 10th. So they're going to move my account on May 10th. I'm like, I'm scared. Migrations never go without.
We'll find out. Let's go find a new platform.
Yeah, actually, I tried Webull, like an offline only for options. They're better, but they charge 1 cent extra, like compared to what you normally see in the live. So 1 cent here and there, but overall you save your cost there actually.
I mean, again, we'll have to look in. Do they have all the information? Do they have like information on the deltas, extrinsic value? Because I use all that information for my option trade, right? Otherwise, I know a lot of people use Robinhood, but I'm like, how can you even be a serious option trader and use Robinhood? You don't even have information to make a decision, right? But so I don't know. I mean, Think or Swim is the best, at least I found, and I'll go with where Think or Swim is.
But so right now I have 25 cents for my options trades right here, right? So Tasty Trade, I heard that it's only one way, right?
Tasty trade is the dollar and no dollar opening and no closing fee, so you can call it as one way. Is a dollar.
Yeah, it's not bad. If you trade a lot, then that's not bad, right? So
on Tasty works if you trade, let's say, huge contract. They have a I think max of $10 per trade. So even if you do 100 contracts, I mean, I don't do it, so not useful for me. But if you do 100 contracts, you still end up paying only $10.
yeah, but I heard their execution is not that great, right? So there's always a catch. If you use IBKR, execution is good, but you got to pay data fees unless you trade a lot, So anyway, we're hungry. Let's go. Thank you, Vivek.
I need to go as well. I need to make lunch before my kids start to scream. Okay, quickly, last comments I'll read. Anyone's rate changed? I'll find out. Jay is asking, James, not be native, but more informed option traders jump into market signals, market frost, swoosh, and project more. Oh, exactly. Oh, no, James, you are perfectly right. So sometimes the fact that how many people join this meetup gives me some signal saying, are we seeing a froth in the market or not? But again, I'm already thinking the market is frothy, but I've been proven wrong. I pay nothing on Fidelity options trading. Not even a contract rate. That's great. Webull, Robinhood are tier 2 brokers. Yeah. So I don't know. Yeah, they sell trader position info. Algo traps them. I don't know, but anyway, I don't have experience with Webull. I have only Robinhood, and the only reason I opened Robinhood was in 2021. A lot of my friends and the folks in this meeting had Robinhood, and then I wanted to help them, so I opened Robinhood. I used it for a year and a half, and then I withdrew all my money. That's where I had Oracle shares. I sold it, never got back into it. I mean, this is not good. They don't even have all the information that I need to do option trade. What I heard, there's no market correction 2 months, no recession at all. Recession chances reduced from 55% to 9%. So I'm not talking about economic recession. My only worry is the market seems to be too frothy. But right now, everything is driven by AI and hopes that we will get a rate cut. What if we don't get a rate cut? What if there is a rate increase? Now, I'm also starting to hear some investment analysts, again, take it with a pinch of salt. They're saying probably Fed may increase the interest rate because the inflation is continues to stay higher. If that happens, what happens to the market? James said it's elections, right? There's another one is the elections coming. Why would markets generally don't go down during elections? So there are so many variables that is, I think it's a waste of time and energy try to predict where the market will go. So if I'm a little bearish, I want to make sure I don't let my portfolio have too much of a delta. If I am bullish, then I'll increase my delta. But I'm not gonna. That's why I'm still invested in market. I'm not gonna go out of market. I just manage my deltas based on how I feel I'm bearish or bullish. Anyway, guys, gotta go. Do have to do my parental duty. And we'll talk to you again next week. Thank you, everyone.
Thank you.